Hey everyone, welcome back to Paid in Theta. This episode, I'm going to just kind of show what I would do if I was to start out from scratch, basically. You come in with X amount of money, and how do you get invested in the stock market? And this is what I would do. I would use the wheel strategy, basically what I've been doing throughout my whole time making these videos if you haven't seen them before. But these are the kind of the companies I would do it on, and I will give you reasons why. And I will also go over how to use the ThinkorSwim platform on TD Ameritrade, which is basically what I use to trade most all my options, at least on my main account. I have separate sides account on Robinhood, but that's a different story. This is a main account, how I really want to be focused on investing my large portfolio. So I personally think that tech stocks are going to do well for the long term, and they're going to do well now in the current state with a pandemic. Computers and technology never stops growing. So I think that's a very lucrative thing to be in and to sell cash cleared puts on. So that's what I'm going to focus on. AMD, I'm a huge advocate for. I think they're going to be higher than this price in a few months. I don't think I could ever get enough AMD. I wish I had more. Marvel, same thing. I think they're going to do very well. They're kind of diversified in what they do. And I will go over each page. Bank of America is pretty much a staple. I've actually sold a bunch of covered calls and cash cleared puts. I've made about 10%. I made $700 off of about $8,000, which is roughly 10% in about 3 months. So it's definitely consistent. That's why it's on my list, is because it's a very consistent one. It's not going to get you huge returns, but it's going to give you that consistency. And if you do own it, it's going to give you a dividend. But you would have to get assigned first to own it anyways. And then Snapchat, I would go at Snapchat. I think this is a very great company. It's not nearly as big as Facebook, but it's definitely growing, and it's got some huge growth potential, I think. And it's at a very cheap valuation, in my opinion. So if I had roughly, I don't know, let's just say $20,000, I would definitely go in at AMD, definitely go on Marvel. You know, you want a little bit of security, so maybe Bank of America. If you want some more security, maybe Realty Income. We'll talk about it later. Sorry. And I would include Snapchat in there as well. So let's just go to AMD. If you're not familiar with them, AMD, basically they make computer parts, GPUs, CPUs. They make computer parts, and they do a very good job at it. They've got a very great competitive edge in my point of view. They have very well priced and high performing chipsets, which Intel is very expensive, and AMD is kind of giving them people alternatives. And if you see laptops, computers, and phones, everything nowadays is running off AMD. I've huge advocate for AMD. I think I bought their products 2 years ago. It's coming up on 2 years. Either way, I think they're going to be the future. They just never stop impressing me, honestly, with everything they've come out, and their stock price has definitely grown because of that. Marvel, it's a semiconductor stock, so pretty much tech stock as well. It's a little bit well diversified, I think, which is pretty good. They do network infrastructure, storage, connectivity, cloud, automotive, like self-driving cars are kind of a part of too. So you can kind of see some of their products. It's not SSD, like storage, Ethernet, automotive, security. I think, it's definitely something that's just not going to get any smaller, that's for sure. And I think the sky's the limit with that one. And Realty Income is more of a staple. It's going to give you a monthly dividend, and it's about 5% a year. So that's pretty good. They just own a lot of real estate, basically. Gas stations, Walmarts, Dollar Generals, FedEx, fitness centers, movie theaters, Walmarts. I mean, everything you think of, Home Depots. So they definitely have been hit hard through this crisis, but I don't know how much worse it could get from here. And they're at a pretty attractive valuation. So with just kind of me explaining it in Snapchat, I would hope that you would know what Snapchat is in Bank of America. I feel like most people do if you don't live underneath a rock. But anyways, let's go back. Okay, so you're gonna have to download ThinkorSwim, like I said before, and once you're on ThinkorSwim, you're not gonna have anything in your account because obviously this is blank, so you're not gonna have any of this. These are basically all my positions that I own. What you're gonna have to do is you're gonna have to come. I like to look at the charts just to kind of see where I'm at. So like, let's just, for instance, let's just go to AMD. So AMD has grown tremendously. I mean, absolutely tremendously. It's at $92 right now, but I know it looks expensive, but honestly, I don't think this company is expensive. I think they're gonna. Wouldn't be surprised to see this company at $200 in, let's just say, a year. I think that's very realistic for them. They've proven it within the past year already, so I don't know why they wouldn't continue to keep progressing the way they are. Anyway, so you type in AMD in this box, and then when you want to trade a cash cleared put on this, you go to trade. You're in AMD, and this is basically the options chain. It'll pull up this. So what you want to do is you want to see what time frame you want to go in. I usually like to do a week out. I know this is a Tuesday, so it's not a full week, but for instance, just say it was a Monday, say it was the 31st. I would click here. I would go down. So I'm very bullish on the stock, which means I think this stock is going to go up. That's pretty much bottom line. Bullish means I think it's going up. So you come here, you want to go to all strikes so you can see every single thing, because if you only have 4, you cannot see that much. So you want to do all. So now you can see everything that's publicly traded on the options market for AMD. Here's the call side on the left side, and here's the put side. So you want to sell a put. So sell is the bid side. It'll just automatic. So if you come here, it's buy. You see the little cursor underneath it says buy. Underneath here it says sell. So what I would do if I had this money is I would probably go $1 out from here. So like the 91.50, I would say, or the 91. But I would probably say the 91.50, just because doing the math, you honestly, you want to own this company. I would be buying this at a discount. So the stock is right now, it's at 92.18. I'm basically saying I want to buy this at 91.50. So I want to buy it when it drops a little bit, and then I get paid $165 to do it. So to me, it's a win-win, right? I want to own the company, but guess what? I can buy it a little cheaper, and I get paid to do it. But the reason why you get paid to do it is because if it drops below 91.50 in a couple days, then you have to buy it at 91.50. So that is the drawback. However, I think if you want to own the stock, it's a very, very good way to get into it. So I would click on this right here, sell. Now it's going to pop up. It's going to pop up 10. Well, I don't have $90,000. I have $9,000 I want to use. So you have to take 10 out of it. Okay. So it's a single. You're selling it. You have one. The symbol is AMD. That's the stock you want to sell. The expiration is this week. I want it to buy it at $91.50. I'm selling a put. Okay, that's all right there. Just like you see it, this is correct. This is what you want to see. And then price. So you want to, I usually, when I do this, you want to get in the middle between the bid and ask. That's the natural limit. So I would do 170. But honestly, I like to bump it up just a little bit because I know everything ebbs and flows. And while you might not get assigned immediately, or not assigned, you might not get filled immediately, which means someone buys this from you. They're buying what you're selling. I think it's probably the best way to go, in my opinion. But I would stick pretty close to the natural price. This company has even if you lose, in my opinion, you win. I don't see how you could really ever be down for more than a week on this company. Okay, so that is not what I want. Let me this is not it. Charts, AMD trade. What did I do? I guess I don't even know what I'm doing. How do I get out of here? There we go. Okay, so AMD. I don't know what is going on right now. Why is this out here? Oh, active trader, turn that off. Okay, sorry about that. Turn off active trader. You want all products. It happens to me too. So I want to sell it a week out, a little bit below, not too much, and I want to own it for 173. Okay. So honestly, this number is a little lax in my opinion, just because there's only a couple days left. On a normal week, I've looked at it, and I want to say it was like at least $2. So for instance, let's just say $2 to make it easy. Now this is times 100 because it's $2 per one share, and there's 100 shares in each contract. So I know 2 might not sound like a lot, but that is a lot. Okay, so Marvel. Let's look at Marvel, because this is another one that I personally think, I mean, everyone needs to do their own due diligence, but this is what I think I would sell if I had an account starting up. So this one it's after hours, so the things are all buggy. This would be closer to like 54, just because you see how these two are kind of close. It's not 14 cents. I actually sold this one today in my normal account for I think 40 cents. So that's pretty good. 40. So basically 1%. So let's just say I mean, I did this already, so I would probably do the same. I would sell it like, I mean, if you haven't noticed a pattern, just a tad bit below, so you get a little bit of dip buy, because you don't want to pay like top dollar for it, but at the same time, we're getting paid for it. So, in fact, let me just pull up what I did. So today, I sold the 38.50 for $41. So that's pretty good right there. We'll say zero point 0.4, as this is $2. This is 0.4, so that's not even 50 cents. If that, but you know, you times by 100, that's $40. Times this by 100, that's $200. Bank of America. The next one I would do, type in BAC. That is the symbol. You come down. This is what you'll see. You go to the weeklies. Like I said, this is going to be a little bit lower, obviously, because of it is halfway through the week pretty much. I would do it pretty close. Like I said, if you haven't noticed a trend, the $25 range, it's close to it. In my opinion, it's probably worth about $25, which is right there, pretty much in the middle of all this mess. Not a bad price, and I would make, in my opinion, maybe 18 cents per contract. I know it says 14, but you know, like I said, it's a couple days late. Tuesday's already passed. 2 days have gone by. These options go down every single day if nothing happens. That's the beauty of it. It doesn't have to go up. It can go down a little bit, but you're making money either way. So these have definitely, in fact, I could pull this up. More info, send to red, and basically pull up chart. And this is how it's looked for the past 5 days. So Monday, which was the 31st, perfect. The 31st at right when it opened at like 9 in the morning, 18 cents. Look at there. You see the 18 on the right? About 18 cents. And you can look up here. That's the time frame. That was Monday. That's right where it should be. So it's a really good guess, but honestly, I look at this enough to really know. This is a little bit more advanced. You don't have to look at this. This kind of just tells you the ebbs and flows. Like I said, AMD, we can pull that up. I usually set it just a tad higher because I know that the option chain will move a lot. The 9150, let's send that to red again just because this is the red, and pull up the chart. So, this is 5 day, a minute. Is it? Let's change time frames. Anyways, this is from Monday because 8/31. 8:31 at 8 in the morning. 8:31 at 9 in the morning. Obviously, it took a huge bump up. So you could have sold this for $6, so $600, and now it's only worth $120. As you can see, AMD has gone up tremendously. I was actually going to sell a cash accrued put, but when a stock jumps 7% in a day, you don't really feel too good about it because it probably is going down. But that's I should have sold it. I definitely messed up because I knew it was very well priced, and of course it goes up a lot. Anyways, that's beside the point. There's very, very good value in this. I think it's going to be good long term. And when the stock price goes up, you actually lose value of something that you've sold. So say you sell something to someone for $100. Well, in a week, it's only worth $10. You made $90. That's kind of how it works. So that's that. That's what I would do for Bank of America, Marvel, and AMD. And Snapchat, same deal. I typically like to sell these on red days. So today was a red day for Snapchat. That's just my personal preference. I think when something is doing very well, it has a chance to come back down. I mean, obviously, it goes up a lot. It's going to come down a little bit. So, in my opinion, a red day when it's down is very, very good to sell because it's more well priced. It's on a discount today. It's on an 80.8% discount. It's better price than it was yesterday. That's basically my mindset of it. So we can look at what I sold today because I did sell Snapchat today for $21.50 for 23 cents. So let's just point 0.23. So if you haven't noticed, this is times 100 like I've said before. So all this, so do the equals sum of all these numbers equals 2.81 cent or dollars, which is times that by 100 like I said, that's $281 off of $18,000 because everything here is times by 100. I know it is confusing, but that's just how it works. So this, I would sell another one in my opinion. So 22.41, just roughly. I know this is actually wrong because I would be selling the 21, so it'd be $100 less. I'd be selling the 28, so you could subtract another $500 from this, and really it would be like 19,000 something. But still, if you're not catching my drift, you see the return here. It's over 1%, and this is just in 1 week, folks. 1 week, you can make $300. Of course, if these companies stay above the prices that you sold them at. But if they do, I think we're in luck because AMD, I mean, just look at AMD. So say AMD, say it does drop down to 91.50, right where we sold it at. So really, we made $165, right? And it's worth 91, or you bought it for $91.50. So really, if you do the math, you really bought it for like $89.90 something cents, right? Because you subtract how much money you received from the price, really, you bought it for the high 89s. So right there, you're getting a great deal. I mean, you really couldn't beat it, right? Because it's at 92 right now. I mean, you're getting like $3 off 100 shares. That's great. On top of the fact, so let's just say it does drop to 89. What we can do is we can look at next week. We would sell the covered call because we own it at 91.50. It's at just say $89. So let's move it to because, or move it 1, 2, 3, 4. So let's move this for 1, 2, 3, 4. 1, 2, 3, 4. So really, you could start selling the covered calls for now. This is a few days in advance. So obviously you're not going to get this much. That's kind of why it's hard to fully understand. I guess you could look at this one. You could sell it for 1, 2, 3, 4. You could sell the same price, so exactly where you got it at, for about $90, right? So even if you get stuck with it, you can make money on the put side, so you don't own it yet. But if you quote unquote lose and have to buy it at a said price, then next week you can go ahead and sell it for even almost more money. It's a great deal, and I think that if you utilize this in a stock that typically goes up or has a very, very good chance of going up if you've done your own due diligence, I think this is a very, very good strategy, especially on when you start out, because you don't really want to. You could go for the spread of the portfolio, but I think this is a great way to just boost your account. You get more than 1% a week, especially on something like AMD. You're getting more than 1% a week. And then what I do with my reinvestments is I buy this company. So say I made $165. I'd buy one share of AMD, and then I'd buy like an ETF. Just say SPYG. It goes up. It follows the S&P 500 and goes up long term and pays you dividends along the way. In my humble opinion, I don't think you could do it any better than this. So this is kind of pretty much a baseline of how you do it. Like I said, you have to use the TD Ameritrade ThinkorSwim platform. You have to download it to your computer. You have to go to each one of these stock symbols. You have to look at their chart. Click on, this is SPYG, but AMD or even O. So actually, I took a position on O. It's a little bit more defensive position, but I think it's still a good one. I sold it for $180. Of course, now it's $160 roughly, because just in between the two. I sold it right here for $182, right? So I made $182 off the bat. I had to put $6,250 up for, not grabs, but out there saying I will buy it. But I don't mind owning it because it's a good company that I want to own. I think it's very well priced. It's obviously not overpriced. We're still in the midst of a pandemic, but I'm optimistic, and I think the broader market is optimistic. It owns real estate, and it's getting paid by tenants still. And it still has it's well diversified in real estate, and it has a very good collecting rent. And it pays you monthly. That's great. So if I do lose on this, well, I made $180. So really, I'd be buying it cheaper than what it is. And then if I lose on it, I get paid monthly dividends. And then guess what I would do? I would go back and sell a call. So say I got assigned here, I would sell the 60s, because it depends on how much you want to own it, right? So if you don't really want to own it that much, you would sell it right where you bought it for. You break even, but guess what? You'd be making $100 here. Oh, let's go back. $100 here and $100 there. That's really good income. So you can't complain on that. And if you kind of want to own it, you can go a little bit higher. You can say, I will sell it for $65. I know I bought it for $62.50, but I want to sell it for $65. You could do that. Guess what? You make $50 in a month. That's really, really good. About 1% a month, 12% a year. That's pretty decent. And you're getting paid dividends. So that 12% is more like 17%. And because there's just so much compounding on this. And if you actually do have to sell it, you made $250. It's the difference between this and this. So really, it's a win-win situation in my opinion. It's a great way to enter a position because you're actually getting it cheaper than what it's worth. I know this is actually 5 cents more than what it's worth, but I think this is a very good price. But something for AMD. You cannot buy AMD right now. It's impossible to buy AMD right now for less than $80 or $92. Where's AMD? Is it even on here? I don't see it. Okay, so AMD. You can't even buy it for cheaper than $92.18. But you could say you'll buy it for $91.50 and that someone will pay you. So I'm going to get off my soapbox, but really I think this is the best way to do it. I would go pretty aggressive in this. There's a lot of money to be had. Yes, you could, like I said, you could lose. This stock could go down to $80. You could lose 10 grand. I know it sounds like a lot, but what you do if you're in a very, very tough situation, what I mean tough, what I mean you're down by $1,000 on this, maybe a little bit more. What you could do is never sell it for less than you bought it for. That's simple math. And AMD is so good, you could get a lot of time if you were really, really down. You could get a lot of time. So October 2nd, look at this. October 2nd, I want to sell AMD for $105. It's at 92 right now. You'd be making 10 grand doing that. You know, you make 10 grand and then you automatically get $250 or $280, my bad. That is like almost a deal of a lifetime, right? That is unbelievable deal. So even if you are down and this wheel strategy of selling puts and then rolling them into calls, even if you're down a lot, you still have money to be made every single month. You get this money, you reinvest this money into good quality ETFs and stocks, and then you just never sell for a loss. And then week after week, you get paid. In fact, I can actually come here to layout, come to all these delta, gamma, theta. Theta is basically how much it loses every single day if the stock stays the same. Loses $10 a day if it stays the same. That is crazy. You could be making $10 a day. I guess what you do the 300. So if that's 30 days out, which it roughly is, that's $10 a day because it's $300. 30 days, $300, $10 a day. You're making $10 a day. That's amazing, right? $10 a day just by owning it. There's a good term that I thought of. It's you're renting to sell. You're selling it, or people are renting the option to buy it from you. And if it goes past that, then you sell it to them. So say a tenant comes into your house, says, I want to rent this place. You say, okay, but they're like, I want to rent to sell it. I want to rent it for 1 week. And if the property value goes up, above a certain price, aka this price right here, I want to buy it. I will pay you X amount of dollars for this week. What do you say? And as long as you don't sell it for less than you bought it for, you're making money. So that's pretty much it, folks. I just wanted to show you basically what I would do if I came out with a new pot of cash and I wanted to get in the stock market. This is exactly how I do it. So thanks for watching, and I'll see you next time.